Hello traders, out there in Traderland, D7 here with Grok Trades Weekend Edition video. And good through Sunday, August 30th, 2020, and the markets on Friday in the day very bullish. Everybody's up. US dollar down, big drop in the US dollar. Silver and gold higher. VIX down 6%. We're at 23. And Bitcoin at almost 11,500 time of this video. But guys, listen, the housing market is on fire. Bullish. The Dow is finally in positive territory for the year. Are you kidding me? With the COVID drop, we bounced back and now breaking records. I mean, the NASDAQ, the S&P 500, everybody's in record territory right now. That is insane. And then there's talk that the Feds are not going to be raising rates anytime soon at all. As long as employment stays strong, they're not raising rates. Interesting, right? Really interesting. They're looking at a 2% inflation going into the future here. Guys, that is telling me strong economics are taking place. The economy is rock solid when you're seeing that sort of stuff. And check this out. U.S. consumer spending continues to rise. Wow. I mean, a lot of bullish activity out there taking place. Doesn't surprise me that the broad markets as a whole are reaching these new heights. Looking at the spider daily chart, look at this. We just keep going higher, record highs yet again. Look at this, this gray line. I want to show you this gray line. This goes back a ways. So this gray line is on the support level. This goes back to December 2018, okay? December 2018. And then we hit again here on October 2019, okay? Those are two major points. It breaks those points here. It breaks down below February 2020. And we broke up above that, okay? This is a daily chart. We only have one more day through August. That day, one day, and then after that, the new month, okay? So that was a really important line for it to get up above. You look here at the Dow, same thing. The diamonds are going higher, not too bad. Now, positive for the year is, this is the diamonds, not the indices that we're looking at here. The triple Qs daily chart at resistance. Do you see this? This resistance you can see here. We're there again, and we hit it 3 times now. 1, 2, 3. Major resistance on the daily on the Qs. When we got there here, we dropped. When we touched it, the line here, we dropped. We touched the line here, we dropped. We're at that line again. Will we drop? There's a good chance of it. We'll see. Russell's 2000. The Russell 2000 is in big time trouble. Support, major support. Support is now broken. Now, I'm going to blow this up so you can really see it. This is the Russell 2000. These are small caps, okay? So we're right here at that trend line acting as resistance. If I go to a line chart, you'll see it better. On a line chart, we go down, we found support, we bounced up, we broke support there. Now we're back at support. Do you see that? So do you see how I'm not touching that right there? I'm not touching it. So I need to tighten that up just a hair. Now I'm touching it. We're at major resistance right here. Do you see that? Nobody sees this but you. Because you guys are following me, you now are aware of what reality is. The reality is we broke that support line. That support line is now acting as resistance. Okay, that's what we're seeing here. Now, if you were to take these trend lines off, you just say, hey, we're going up. Everything looks fine. Everything looks great. That is not factual. Financials overall, guys, are laggy. Very laggy. But what I like here on the daily on Thursday, we broke above on a symmetrical triangle. Boom, above. As long as we can stay above that, that's great. But we have the 200-day moving average coming down here that can be acting as resistance. Again, we're kind of laggy here on financials. I don't like to see that. US dollar Friday just took a tumble straight down. That's helping out the markets. It seems like all countries out there are trying to devalue their monetary fiat dollar, and but we're doing the same. We're dropping lower. But I hope this isn't a slippery slope that we're on here. Silver, big bullish pennant, beautiful, bullish on silver, bullish on gold, big pennant, also bullish on these metals, okay, these precious metals. VIX is, if you look here on the VIX, the last few days of the week, we've been creeping higher. This could be indicative of some bad things to come, okay? So that's not lost on me what we're seeing here. The VIX starting to head higher here, but we're caught up in the moving averages there. Bitcoin, if you look here, could be a head and shoulder developing. Anybody's guess what's happening there, but it's under a little bit of pressure. But here, we're back at the spider. I want to show you something, okay? This is so important that you see it. I'm using TradingView. You can get the link down in the thing, but TradingView is a free service you can use. I don't use the free. I got the premium because it gives me some things. I'm looking now at the weekly chart of the S&P 500. We are at major resistance on a major trend line, and not only it's two trend lines. So let's slowly go through this. I do not want this to be lost on you. If I blow this up so you could really see it, I'm going to tighten this down just a hair, okay? So we're on it. You got a TradingView. After a while, those lines start to move on you, and you have to always kind of tweak them from time to time. But major resistance here. If I go to a line chart, you'll see it. Do you see that major resistance? Let's just stay with a line chart, actually. And I'm just going to march forward here. You can see, if it's not a line chart, you can see the resistance. Let me do this. I'm going to march forward. Oh, let me give you the times here. So this goes back to 2014. This is June 2014. You can see that down here, okay? And then we found resistance here on 2014 at the end of the year. This line was a major area of resistance here at the beginning of 2018. If I go to a line chart, you'll see it right there. If we go up further, right before we had our major crash, guys, the Corona crash, we touched it again. We did that, and that puts us February 2020, coronavirus crash 2020. If I come up here again, look where we're at right now. Bad news. This red line is a shorter term. This goes back to 2018, and it goes to this line right there, and it comes up. We have two major trend lines there on a weekly chart. Guys, that is bad news. Every time we hit that line, going back to 2014, we crashed, we dropped. It hit its head and dropped. We are there again right now. We have 1 day left in the month, okay? But the week stopped there. It'd be interesting to see what happens next week, because right now we're in big time sell territory. You sell this right now. If on a weekly chart, this is sell territory, sell. Take profits. That's what this is telling us right here. If I go to the diamonds weekly chart, we're up. No major resistance areas that we're smashing our head on. The S&P 500, different ball game. If you look here at the Qs, we're very extended to the upside. Can it keep going? Yes, but we're really extended. It is begging for some sort of pullback. We are very extended on a weekly chart. The Russell's 2000 is in a lot of trouble. First, it's laggy. Again, we're not making new highs with the Russell's 2000. That is a bearish sentiment. That is relative weakness with small caps, with ETFs, stocks that are riskier, quote unquote, people not wanting to pile into them as much. The Dow, on the other hand, is positive for the year because of that. That just happened. That's showing people still bullish, but their flight is into safer stocks. Okay, that's why you're seeing that. The problem here is we're at major support on the weekly chart. We are, if it's going to break down, here's the time to do it. If I go to a line chart, you'll see it. We're support. We're right here at that support. Will it break down? It certainly could. It certainly could. Financials, I always lean on that. Financials also weak. Financials aren't making new time highs. Financials are giving us nothing but a bear pullback. I mean, man, if I were to go here to a bear pullback, I'm going to just take a quick here look on the Fibonacci. Fibonacci is past the 61.8 right here. But we're at major support. If it breaks down, look for a sizable run to the downside on XLF, the financial ETF. And if the financials drop, the rest of the markets are only as strong as the financials there to support them. And that could be problematic for the markets as a whole. US dollars down on the weekly chart. All is well. Silver looking great on a weekly chart. Great on a gold chart. Weeklies are looking good. The VIX is down. Doji time, usually after you go all the way down and then get a doji, usually you get a reversal. We have a bullish divergence on the MACD centered oscillator down here also. So that's another bullish activity on the VIX. The VIX is an inverse indicator. The VIX goes up when the markets go down. When the markets go down, the VIX goes up. That's what we're seeing here. We're down with dojis, a doji reversal pattern. Can we now go higher on the VIX? If so, that means fear will increase. That means the markets are bearish, and it will be bearish. Bitcoin hit its head up here, it pulled back a little bit, but overall looking really strong on the monthly chart or the weekly chart. Okay, now we only have 1 day left with the month. 1 day left for the month. And I'm getting ready to share something with you that's going to sound crazy, but I'm going to share it, okay? 1 day left in August. We broke above a major area of resistance on the spider. This is the spider S&P 500. We're above that, but this is a dynamic candlestick, meaning it's still moving. It's going to move one more day before it closes out and becomes static. Once it's static, that means, and if it closes above this trend line, that means it broke a trend line. That will be really, really bullish for the markets, okay? Really bullish. Because if I go back to a monthly chart, guys, this is so important you see this. This monthly chart resistance was hitting back in 2009. 2009. Smashed its head here in 2018. Got near it in 2018 and dropped again. We come up, smashed its head here in January and also February 2020. That's COVID. And this is where we're at right now. We're above it. That is big time. This is a major trend line that broke to the upside. But we can't call it yet. Why? Because we have 1 day. It's a dynamic candlestick. It's still moving. It's not set. Nothing has solidified. So here's the crazy thought. Could the S&P 500 on Monday have a bloodbath? Bloodbath. Where this goes from 350 and closes down at 335. So that would be a big 15-point drop on the spider. 15-point drop on the spider. Could that happen? Could that happen? That could easily happen. If we do that, this candlestick will be just like this candlestick. Do you see this? At one point, we had the big, glorious white candlestick or green candlestick above the major trend line, but then it retraced in a bloodbath. Will we have a big upper shadow right here above this trend line? Maybe, maybe not. Everything hinges on Monday. If Monday is a bloodbath, that will be major resistance on a monthly chart and the weekly chart. Remember, again, I got to show this to you on the weekly chart. If I go to the spider on the weekly chart, guys, we're already at a double trend line major resistance. And usually when you get a big expanded range candle like this, after a big extended run as an exhaustion candle, that you usually get a reversal pattern after that. You'll get a bearish engulfing, a dark cloud cover, a whatever. You could have a lot of different reversal patterns that happen right there, and then a drop. That would make sense. If we do drop on Monday, it's because we hit our head on the major trend line on a weekly chart. That would set into motion our monthly chart coming down, 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 and proving for the month that we're also at major resistance, because we'll have an upper shadow here because it sold off, and closed down below 335 on the spider. If that happens, bearish activity going into the future, even with a red hot housing market, even with unemployment doing as well as it's doing, even with the Fed saying they're not going to raise rates, even with the fact that the NASDAQ, S&P is hitting record highs, and that we're back in bullish territory on the Dow, even though consumer spending is rising at this moment, technicals don't lie. Why? Because it's raw data. The markets do whatever it thinks the future has in front of it. Okay? And I'll tell you this, after trading in the live markets for 22 years, I'll tell you this one thing. The markets we hate as professional traders, expert traders, uncertainty. Uncertainty is the one thing that we don't like. Here's why. Most traders thrive off of uncertainty because they are gamblers. If you're the type that likes to go into the casino, you thrive on uncertainty because your excitement of the unknown. You love that. Unfortunately, that's not how you win. You are victimized more. You lose more money than you win at the casinos, period. Professionals, we don't like uncertainty. We play systems that stack the odds in our favor. That's what we like, and that's what we play. We have a level of uncertainty going into the political markets, on the political side of things. Who will win the November election? We don't know. That uncertainty, smart money does not like. Because we don't like that, we don't like to have exposure. Because we don't like to have exposure during times of uncertainty, we sell. When we sell, the markets take a hit. And when the markets take a hit, you see red charts. Reverse the video, re-listen to that again. So, we could very well, from this point going into the November elections, see at best a lot of turbulence. At worst, a nice bearish pullback, a healthy one that we need. Some people say, well, we got it already with the coronavirus. I'm going to push back on that just for a second, because the coronavirus was an anomaly. It was a one-time type event. So you have to look at that coronavirus drop and rally as an isolated event on an island by itself. Do not look at that in the confines of the last 10, 11-year bull run. That's what my thought is. That's an idea. That's an opinion. That may or may not be right. If that's true, then we're long in the tooth. We are overbought. We are very extended. Most bull runs are 5 years. We are double that, more than double that actually. So we could use a good pullback in the markets, a good 3-4 year pullback, guys. We could certainly use that. If there is a political change, we might get it. If there's not a political change, I think the markets are going to build a high base on the longer term time frame. In other words, we're going to chop sideways for several years. That's what I see. It'd be perfect for swing traders. last 11 years been great for buy and hold people. If you're a buy and hold individual, you've had an awesome couple years, okay? Awesome decade. But that will come to an end. It will be swing trader heaven going into the next 3 years, I believe. But I could be wrong. Could the markets keep rallying northbound? They could, but it's not something we've ever seen before. You know, we've not ever seen a market like this before. So it could continue to do that to infinity. Hard telling. But all I can do is base my opinion off of past examples and what has happened, saying this is the norm, and here's a pattern of that norm playing itself out through history. How does that apply to what we're seeing today? Okay, that's what I'm thinking. But I do want to share something. A lot of people, when I say warning, 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 they assume that means I'm calling a market top and that the markets are going to come crashing down. I never say that. What I see as an analyst is I look at just mere probabilities and what technical analysis is doing at the moment. And I say if we are going to drop, it's set up to do so now because of X and because of Y and because of Z. It's because of these things. I build an argument for why it could happen now. Unlike a week before, 2 weeks before, a month before, a quarter before. Unlike those times, I'm seeing something different now. So because I'm seeing something different, I'm wanting to alert you guys because everything in me wants you to be highly successful in trading. I want my viewers to rave about Grok trade. I want you guys to say, man, there's nothing. Grok trade is the best thing since box spring mattresses. That's what I'm hoping for. The only way to do that is to keep you guys from losing money. How could I do that? Well, anytime I see things that alert me to make me want to kind of say, oh, all right, let's tighten up stop losses. Let's take some profits off the table. Anytime I see that, I want to disclose that to you all, okay? Even though what I'm sharing is educational purpose only, and nothing is to say we should buy or sell, right? That's because I'm an educator, not a professional investment advisor. With that aside, if I see something, I feel like I have a fiduciary responsibility, a moral responsibility, just to share it with you, to say this is what I'm seeing, and if I'm willing to make changes in my own investments and trading based off of what I'm seeing, I think it's only makes sense for me to share it with you, right? So the only thing I ask for some of you, and I'm not talking to most of you guys are major supporters and you understand, you're a little more savvy. But the thing that I want to share to some of you, just because I say warning, 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 and just because I say we have a chance of the markets breaking down, do not run with that because we don't know if it's going to do that. I don't know what's going to happen tomorrow. All I know is what is probable. Right now, I know the markets are at major resistance. And because of that, the probability of a stall or a drop has increased exponentially. All right. Because of that, that's something that is noteworthy to me. But I hope that was helpful. Romulus, we just got out of a Saturday class. Romulus just did a class. If you guys don't know this, you can be mentored by a hedge fund guy. If you want to be mentored by a hedge fund guy who's big on ETFs and swing trading, just go to Grok Trade and go to the mentorship thing and contact us. That's how you do it. So, but anyway, there you have it, guys. Thanks for sticking around. If you made it to the end, say you made it to the end, let me know. Take care. Love you all. We'll see you. Bye.